it's Adrian Hill from Superior Accounting Group. What I'm going to discuss today is the important topic of asset protection. I get asked all the time, what is asset protection? Asset protection is quite simple. If we're all going to work really hard to run our businesses and take some level of risk, then what we want to do is ensure that any risks incurred in running our business don't flow on and affect our investments that we're buying and holding outside of the business or our homes, etc. So if you refer to the slide above, asset protection, there's two layers involved. The first layer is insurance. So it's important when you're running a business that you take out the appropriate levels of insurance and types of insurance to minimise your exposure and to cover yourself if something goes awry. And we all know insurance companies weasel out of claims anytime they can and any way they can. So if insurance fails, the second level of cover is the structure that you run your business out of. And that structure gives you the backstop or the second level of protection. Now the slide you'll see now is a bit of a summary of the types of structures that are available that I touched on earlier. The main ones utilised by the majority of business owners are either trading as an individual, trading as a company, trading as a discretionary trust, or in some cases trading as a unit trust. They're the main structures utilised. Now each one of those structures has its own advantages and disadvantages, and each of those structures has their own asset protection considerations and tax considerations. Discussing that at length is way beyond this video, but what I really wanted you to start thinking about is, as a business owner, you want to ensure that your assets, your hard-earned assets, are protected. So you want to make sure that your business, how you're structuring your business segregates itself totally from any other assets you have. Those assets could be rental properties, shares, managed funds, super, your home, etc. Now part of those considerations are who is actually running the business, who should be the signatory and signing, and actually the person taking the risks. They're the ones that are involved with the business legally as a director / secretary, etc. And the other thing to consider as part of asset protection is if you're going to buy income producing or wealth creating assets, investments, rental properties, shares, etc., you want to make sure that they're totally separate, have nothing, no tie whatsoever to how you run your business. And the person who's in charge of those, who's known as the risk averter, needs to be the one that's legally responsible for those assets. So to summarise, it's really important that you give some serious thought to how or what structure you utilise to run your business and or buy your investments. Because at the end of the day, whatever we do, we want to make sure that our business in no way, shape or form can have, if things go against us, that we don't want our other assets and home, etc., put at risk at all. But it's important to put this in place before you start these things. So please feel free to contact us if you want to discuss this at length.